Okay, welcome back to the channel. First video of 2026 and it's already 8th of January. Well, what are you going to do? I'm a little late here. What this video will do, because I'm lazy, we're going to do a couple things all in one video. So yes, I'm a little late to the show. Officially, we made within a percent or two of 66% return. That's a simple return for year 2025. So you're looking at the path of the portfolio value in blue, and overlaid is the exponential fit to our path. So what we'd like to see is a portfolio value tightly hugging that line, and it's got to be exponential because you want your money to grow compounded. So in a short run like this, it doesn't really make much of a difference, but in a long run, you would see it. You definitely want to put an exponential fit on this, and you're looking for something better than an R-squared value of 0.9. You could see it's 0.96 almost. So very good. Very tight year. The algo does what it's supposed to do. This is exactly what you'd like to see. Now let's talk about the drawdown here. So you can see by the end of the year, we had roughly a 14% drawdown. Now that normally for most folks would be an absolute nightmare. If you're making 15-20% maybe on a good year, you got a 14% drawdown, you're in freaking trouble. But listen guys, a 14% drawdown, you can look at this drawdown plot on the bottom. First of all, we regularly get up to this area. Feels bad when it's happening, yes, for sure, but understand here, you're just drawing down from rather high levels. All right, so you can see we ended the year here. If you go back, we made all the money we were going to make roughly by mid-October, and the rest of it was just sideways. So draw down from a peak, but basically you just made no money from October. And you know, as frustrating as that is, it just doesn't feel like it's some sort of nasty ass drawdown, or it shouldn't be, but in fact it is. But again, a 14% drawdown from 65%, whatever it is, actually it was higher than that obviously, but a 14% drawdown to 65% return is not the same if all you ever made was the 20 or 25% and you know you're into a 14% drawdown. That's a large give back. Not so much for us. So I've shown this before. So again, for 2025 only, this doesn't match exactly what we've done. I remember I had mentioned we only caught one Russell drawdown, and so our gain on the Russell short wasn't this big. Our gain on the NASDAQ long wasn't that big, and our gold return was a little less than this. But everything else was pretty good. It's right on. So that's where the returns came from. Blue bars are when we went long the security, and red is when we went short. And double duty here, this is where I'm going to switch, and so I don't have to make a separate video, just speak to my Patreon members. So remember, come on down, patreon.com/Koyos Quantitative, and try us out. But for my Patreon members, I sent an email out. It was somewheres after Christmas, but so I told you I would elaborate on this, and it's nothing that can't be said publicly as well. Plus, for those of you that aren't Patreon members yet, you get a bit better idea of how we approach things. So I think sometimes it's good to have stuff like this out public. So to get back to what I was discussing with my Patreon members in that, I believe it was the December 26th, 27th email, for if you want to go back and reference it. I was talking about how I would like you to decide on your sizing for 2026 and stick with it. So I know your portfolio balance is going to change. Pick a balance now, pick a number, and just don't change it for the rest of the year. The assumption is it's going to be moving upwards over time throughout 2026. But don't muddy the waters and make your math any harder than it needs to be. Pick a number, pick a value you're comfortable with trading, and then stick with it all year and reassess at the end. So that's what we're doing here. We've had a very nice portfolio value increase for 25, very nice. And we're going to repick our portfolio value, and we're going to size everything off of that now static number for the next year. Best thing to do. Now, position sizing. I give you the full algo position sizing. And I've mentioned this to you, my Patreon members as well before. I'm going to say it again to you again, as well as publicly. You can look at this portfolio value and see the wide values. Okay, this is way more than the 65, 66% that I claimed. What I claimed is what I made. I didn't, and what I gave you was the full portfolio or the full percentage sizing of your positions every time. That's what I continue to do. I commit some level of sin by doing some trades at the full amount and some trades at maybe 60 or 70%. Really, guys, you don't want to do that. I'm not saying you can't get away with it at times, and there's reasons for doing that. I'm not going to get into it. I'm just trying to pick the easiest flow so just you can stick with the same thing. Stick with the same percentage size. So whatever I give you is 100%. I myself didn't trade 100% all time, every time, which is why I'm not claiming I made all of this as a percentage term. I only made the 65, 66%. I didn't make what this showed. And I don't even talk about this because it's not what I made, but it's what you could have made. It is what was called out. I didn't take it. How's that for freaking honesty? Bearing it all, if you will. Because remember, this is the no bullshit trading channel. Unlike these other freaking clowns you'll see out there. You know what I mean. Two Tick Nick and all over the place, Flip Flopper Mike Norman, to name the two that I know. Just a fucking disaster. No, we keep it real. So I claimed only what I really made, despite the fact that there was tons more on the table. So what do I want my Patreon members to do? Let's get down to it. Pick a percentage. I told you in the email, pick 50%. Because the size I give you, honest to goodness, guys, as big as they are, and I know they're big, they're well vetted, and that's conservative. So yes, you can imagine. But what do I shoot for? I shoot for this. I still don't want to see any type of drawdowns. All right, you see regular, you're going to get it to 15%, but over time, I've seen them go to, 26%, upwards of 30. Okay, that sounds horrible. But again, it's off the back of guys making fuck tons of money. So it's a bummer of a give back, but you're still getting just ridiculously good returns. So this looks worse than what it is. Take a look at this. This drawdown here in the middle of October, I remember it kinda, but look it only brought you down to your freaking all-time high a month before. So you keep it in perspective. But still, I don't like to have values any greater than this. And this is the full 100%, remember. So if you're trading what I suggested, 50% of size-wise, whatever I call out every time, your drawdowns are going to be half of this. So in effect, even though this drawdown is 14%, personally, I'm way less. And I know you guys are way less as well. Because you never went the full pop. I just know you didn't. Now, you never told me you didn't. But, and if I'm wrong, by all means, correct me here. But there's no way you did. Because it is eye-opening when you see the size. Some of you, well, if you've been with me a long time for this algo, you've noticed it. Anyone that's come on board in the last month or so, well, you've seen it, and I bet you've shied away from it. And rightly so. It's been good if you did, because it looks like the beginning of 2026 is the same as what's happening here, or what happened in 2025, where we literally went sideways until roughly the mid-March, and then we started on our tear. And look at the end of 2025. Like I mentioned, we've gone sideways October, November, December. 3 months sideways already, making no money. You have to have patience. So it's a little annoying, not because you're losing any serious amount of money at all. It's just annoying because you're not making any headway. So we're doing a lot of chopping. Guys, it's going to happen. Just let that go. Live with it. Your win rate is going to be 50% maybe during times like that. Sometimes less. Don't worry. The good days are coming. And you can't manufacture good days, and you can't know, because you're not Mike Norman, I'm never wrong type of guy. I guess you're never wrong when you're flip-flopping so often. If you're wrong for a second, well, just wait a second, you'll be right? Because not because of the market, but you're just flip-flopping. You can't manufacture this stuff and you can't know anything. All you can do is stick with it. So for my members, pick a portfolio value, keep that static throughout the year. For your sizes, I'm going to give you the 100% sizes, and it's best, I don't want to get into the weeds. You say, listen, I'm going to trade 50% of that, or I'm going to trade 60% or 70%, and try to make that static. I'm going to tell you something. Listen, if this market goes for a total fucking shit, or when it finally does, I'm going to give you an example where you might go from a static 50% of what I'm calling out size-wise to back to 100. Let's play this scenario out because it's probably what's going to happen. When and if this market finally cracks, and if it's a good one, all right, the market's down 10, 15, 20% if we're lucky, you want to be long more often than you want to be short. Once the market finally gets you long equities, so we're talking the ES and NASDAQ and whatever, okay, from a very big drawdown like that, guys, it's almost a no-brainer to go full pop. All right, just go full pop and hang on to it. So I want to say, do 50% to make it easy, but understand there are times where, geez, keep your head up. Keep your head up and, don't be a doomer, and realize if we've had a big stroke down and the algo finally tells you to get long the ES, it's probably going to turn out to be a very wise thing to go the full fucking pop and just hang on. You got to stop in. You know what you're going to lose beforehand, which is comforting. Okay, but that's the time where you might want to go full pop. But if you want to be a purist, you should stick to something like a 50%, 60, 70. I know I'm repeating myself, but it's important. Make those decisions now, not in the heat of battle. And I think I will wrap this up here. Keep this thing under 15 minutes. So again, we've got this under control, my Patreon members. For the rest of you, what are you doing? I said mid-year last year you were going to miss it all, and in fact, you did, because I would put a lot of money on the fact that no one listening to this video in 25 did anywhere close to 65+%. Not even close. Are we going to do it this year? How do I know? It's markets dependent. Are we going to beat most people? Yeah, I'm pretty sure I'd put a large amount of money on that one. All right, we'll talk to you soon.